shaking off, at least temporarily, those concerns about rising tensions between Ukraine and Russia. So how should investors position themselves given the geopolitical risks? Joining to discuss that and more is Peter Andersen, the founder and CIO at Andersen Capital Management, and Chad Morganlander, the senior portfolio manager at Washington Crossing Advisors. Peter, how do you factor in to your portfolio management? And you run a very concentrated portfolio. How do you factor in these geopolitical tensions, if at all?
What is a portfolio manager to do these days? And in my opinion, these things are transient. I know I don't want to trivialize them, but in terms of how one would pick stocks, you know, there's a number of possibilities. One possibility, which is what I pursue, is to almost ignore this as, dare I say, noise, but still focus on the stocks that we think will do well. And remember, we're in Trump 2.0 now. A lot of investors are trying to figure out if this is going to be a replay of Trump 1. And if that's the case, maybe we just redo our stock picking. But I don't think that's a good guarantee. I'm thinking that Trump 2.0 will be very, very different from the first regime, and that we need to focus more on fundamental stock picking rather than saying what are Trump's favorite policies and how can we play into that. That is far more risky, in my opinion, than doing pure stock selection.
So I hear you suggesting that while the Ukraine situation is something you can sort of set aside as, quote, noise, I think that was your word, the Trump 2.0 and the potential changes to taxation and regulation and immigration and all of those shuns could be something that you're going to have to and are indeed now taking into account in your stock evaluation.
Well, I'm actually saying almost the opposite, that so many of these...
Well, then you confuse me, Peter.
Okay, so many of these things are speculative in terms of where we think Trump is going to go, right? So if we were to pick stocks based on what we think he's going to do, what his policies might be, I think you could end up in several dead ends simply because he's so unpredictable in terms of what his policies will be. Certainly, we're thinking that tariffs will be a repeat. But in terms of other steps he's taking, I'm not certain that we can be at all confident that when he's moving forward, he will replay the steps that he did. Thus, when you're looking at stocks, I think you go back to your own playbook and virtually almost ignore what we think he's going to do in this term.
All right. Thanks for the clarification.
Chad, build on that, if you would. So many people right now are looking at these outsized moves we've had since the election. Maybe it's the food space because of HHS. Maybe it's Bitcoin, which is up 35%. Do you fade that? Are there entry points this creates for you? Are you chasing it? What's the strategy?
So, I've been doing this since 1993, and my partner and I, we have a discipline. You would not chase it. You'd stick to your knitting. When you have an election cycle and there's a winner, the worst possible knee-jerk reaction is to then change your discipline. So we would be mindful of being in high-quality names. Yes, this poses risks regarding the HHS when it comes to healthcare, but we believe that the risks over the long run are immaterial. So we would move up the quality spectrum. We're at a high multiple, about 25, 24 times this year, 21.5 times next year. We're trading at a market cap to GDP of 2 times. So we would be more critical about the investments that we're making.
Yeah.
And that doesn't mean you shouldn't invest in equities, but you just want to be in the higher quality companies.